What are the four main types of investment alternatives? Most investors only focus on stocks and bonds, but the ultra wealthy, they build their portfolios through alternative investments. In this video, I'll break down the four main types of alternative investments and how they can work for you as an investor. If your portfolio is missing alternative investments, then you're leaving money on the table. The top investors allocate huge portions of their wealth to alternative investments. Let me show you what these investments are and how they can work for you. Do you want to know the biggest investment opportunities outside of the stock market? I'll walk you through the four categories of alternative investments and how they will protect and grow your portfolio. By the end of this video, you'll know the four main types of alternative investments, why they're so valuable, and how you can start adding them in your portfolio today. Why do alternative investments matter in your portfolio? Traditional investments focus on stocks and bonds and cash, but here's what alternative investments offer. Number one, higher returns than the public markets. Number two, lower correlation to stocks, reducing overall portfolio risk. Number three, cash flow, tax benefits, and inflation protection. The wealthiest investors and institutions invest 30 to 60% of their overall assets in alternatives. So here's an overview of the four investment alternative asset classes. Number one, real assets. This includes real estate, farmland, precious metals, and infrastructure. Number two, private equity and private debt. These include leverage buyouts, debt fund options, venture capital, and private lending. Number three, hedge funds and structured products. These include products like derivatives and options trading. And lastly, commodities and digital assets. These are gold, oil, agriculture, and cryptocurrency. Let's break down the benefits of each type of alternative investment asset class. Real assets, the most reliable alternative asset class. This is my favorite. One is real estate. These assets include real estate, farmland, infrastructure, which are roads or utilities, and precious metals. Why are they so valuable? They're tangible, real assets that hold value over time. They provide consistent cash flow, either in the form of rental income or reoccurring fees, like tolls and leases. They hedge against inflation. The value of land and commodities appreciates as currencies weaken. Examples of investment alternatives that I invest in at my private equity firm, Patriot Holdings, is mobile home parks, self-storage facilities, and small bay warehouse. Mobile home parks are strong, durable, cash flowing assets because they serve the affordable housing need. Self-storage has high profit margins and there's a high demand for the product, and it's month-to-month leases so it can keep up with inflation. And small warehouses provide steady cash flows due to the need for contractors and e-commerce businesses wanting small places that are affordable that they can operate their businesses out of. Next category, private equity and private debt products. This is a very high return strategy for the wealthy. Everyone wants to be the bank. The first strategy is private equity. Private equity buys businesses, improves the efficiency in the operations, and then they sell them to a public company for an accelerated multiple. This has been a very popular strategy the last 10 years, and these private equity firms are gobbling up businesses like home service providers, dental companies, medical providers, tech companies. Private debt provides loans to real estate, businesses, or consumers, and it offers passive income to the investors. Why are these strategies so valuable? Higher returns than public stocks. They've been averaging 14 to 18% returns over the last 20 years, and that's annual. Public stocks have been averaging 8 to 10% annual returns over the last 20 years, per the S&P 500. Private equity offers more control over business operations and management. Private equity offers less volatility than the stock market. Many of the assets or the industries aren't correlated to the stock market, so if the stock market drops, private equity investments maintain their value. Next category are hedge funds. This is the advanced alternative investment. Hedge funds use strategies like long and short investing, arbitrage, and market hedging. Structured products are over my head and quite complicated, but they include derivatives, options trading, and complex financial instruments used for risk management. Why are these investments valuable? They're uncorrelated to the stock market, and they're supposed to protect you from market downturns. These products are used by massive institutions and ultra wealthy individuals to hedge against risk in the stock market. The last category has been picking up some steam over the years. It's commodities and digital assets. These assets are inflation hedges and emerging opportunities. Commodities include gold, oil, farmland, and agricultural products. Digital assets include cryptocurrency, tokenizing of real estate, and blockchain-based investments. So why is this so valuable? Gold and oil protect against inflation and currency devaluation. Farmland provides long-term appreciation and food production income. Bitcoin and blockchain technology offer growth opportunities in digital finance. So now that you know the four main types of alternative investments, the next step is learning how to evaluate private equity and real estate deals before you invest in them. Click here to watch my next video so you can learn to analyze private equity opportunities so you can be a private equity pro.